What is FDI? FDI is a direct investments. Direct investments means what? A foreigner coming from other country make investments in our country. We gave an example, na, domestic product, okay, foreign product annappudu Kia Motors is an example of FDI, where the foreigner comes, make investments here, okay, creates some sort of infrastructure, bring technology, generates employment, etc. FDI is for long term, where you come here, generate economy for the country and for you, stay happily, continue, which is for basically long term, 10 years, 15 years, etc. And FDI is moreover very stable, very stable. Very stable means what? You do not have any issues with them. They'll come here, they'll stay here 15 years. Kia came right little long back ago, started its setup in Andhra Pradesh, okay, and setup ayyaka COVID ochindi. COVID scenarios lo you started most of the companies which related to the share market, etc., it will fluctuate. But FDI, as it is long term, 10 years, 15 years, 20 years, 30 years, etc., so that they will have some sort of benefits from the government, that this year you will pay less taxes, etc., and they'll stay. Next year they will recover. This is a relation where you maintain with the government, that is FDI, okay. And the FDI is basically long term, which is very important. One is FDI, one is FII. Now what is FII? FII means what? You are not coming to India, you make indirect investment, foreign indirect కాదు, this is a problem, institutional investment, foreign institutional investment, foreign direct investment. So foreign institutional investments means you are not coming to India, rather you are making investments in India in terms of shares, bonds, etc. So you will make investments in terms of share, bonds, etc., and you are making indirect investments. This is called as institutional investments. You come here, generate infrastructure, economy, etc. Directly you are involved. Directly you are involved in the mechanism, operation, etc. You are not bothered about mechanism, operation, etc. Rather you will make investments. Whenever you will get profit, you will take those profits. You are not involved in any operations, maintenance, etc. Here you are involved in operation, maintenance, etc. Your direct involvement is there. Institutional involvement is there. Whatever institution says, you are listening. Whatever you say, your company will listen. Which is better for the economy? Which will add more to the GDP of the economy? Which is better for the economy, FDI or FII? FDI. FDI generates employment, infrastructure, technology, okay, export, imports. It generates trade actually. Lot of taxes been added to the government. Okay, per capita income is increased. So this all things are part of FDI. FII only brings assets, that is in terms of dollars. FDI brings lot of things. FII brings limited things. FII is volatile. Volatile means what? It will be exposed to external market. External market is growing. External market is growing. This external market is growing. This will have an impact in the shares. External market is growing. This will have an impact in the shares. This will show a positive impact in the shares. So when external market is growing, when there is a positive impact in the shares, it is good for the economy. When external market is volatile, fluctuating, then it will immediately, they will start withdrawing their shares. We discussed Tobin tax, etc. So this is volatile, this is unstable, that is not for long term. But if it's not for long term, there is lot of issues, then why are you allowing? We get reserves, and you will ensure that you will always maintain inflation. You will always maintain inflation. In inflation, when inflation is good enough in your country, they will retain this. When you are not having inflation, you are not getting profits. There is an inflation, this company will get profits. These profits are shared with whom? This one. So unless and until there is inflation, I will not come to your country. So inflation benefits. We'll talk about FII. When talk about FII, what is FII? You are a foreigner wants to make investments in India. Foreigner wants to make investment in India, and this investments you are making indirectly. Whenever you get profits, you will take away, you will claim. So now foreigner making investments in India, claim those benefits, etc. Volatile situation, asthirata, volatile will be there. Now there are two important things in this. First one is QFI. Second one is FPI. QFI is qualified foreign investor. FPI is foreign portfolio investor. These are the both which are type of FII. Basically, we are talking here about capital market. We are not talking anything about short term. We are talking here anything about capital market only. We are expecting that you will come here for long term. And what is that involved there? Infrastructure, assets, liability is there. FII, shares, bonds, assets. Put together, everything is part of capital market. When everything is part of capital market, then you are making investments in India, capital market. So these investments which are happening in India could be of two types again. Why I am calling indirect? You are not investing directly in India. You are investing in a company, and that company is associated in India. Why I am calling direct? You directly came and set up a company, Kia. Why I am calling indirect? You did not come to India, but you choose to invest in Infosys. Infosys is well established in India. So two cases. One is Kia, other one is Infosys. So when you want to invest in Infosys, there are again two cases. How will you invest? One is KYC norms. Norms which are set by whom? Norms basically it has been set by SEBI, Security Exchange Board of India. So SEBI will set certain norms. Norms means what? Rules, regulations. Okay, what is the percentage you are coming out investments? Okay, capital account convertibilities. All these are being declared. So that will be part of this SEBI rules and norms. If you are qualified with the SEBI norms and you are allowed to invest in Infosys in India, then you are qualified foreign investor. Qualified foreign investor. If you are not qualified, still you want to invest in India, then you will come into FPI, foreign portfolio investor. So foreign portfolio investor and QFI. Which of the following is direct and which of the following is indirect? Which of the following is direct, which of the following is indirect? Good, very nice. QFI is, and what is FPI? Both are indirect only. So both are indirect. In that indirect, one is qualified, one is disqualified. But disqualified aina, you want to invest in India, scope is great, market is good, so you want to make that market, you want to, so that what will you do? Now we'll draw QFI. Qualified, that means this company, this person ABC will invest directly in India because he is qualified the norms of SEBI. Qualified the norms of SEBI. That means directly you will invest in Infosys now. Okay, QFI. Now what is FPI? Foreign portfolio investments. FPI, you are disqualified. So what will you do? Here same, the company ABC for example, he will choose another company. He will choose some other company. So this company is being declared qualified by SEBI. He is being declared qualified by SEBI, and you will hand over your investment to this company C. Company C will invest in Infosys now. This is again indirect, but here you are choosing one company that is qualified by SEBI. So SEBI promotes C and C is promoting this company ABC. SEBI promotes C and C is promoting this company ABC, and this company C, which has invested in India, will issue a confirmation which is called as P note, participatory note. That was asked in your exam. Which of the following institution issues P note అని ఇచ్చాడు. పార్టిసిపేటరీ నోట్. ఒక ఆప్షన్లో ప్రామిసరీ నోట్ అని ఉంది. దట్ ఇస్ రాంగ్. ఇట్స్ అ పార్టిసిపేటరీ నోట్. పార్టిసిపెంట్, హూ ఇస్ పార్టిసిపెంట్? ABC is a company, the participant. He is choosing company C. So on behalf of ABC, company C is investing in India, that is the shares India, and he's been qualified by SEBI. And I'll give you one confirmation that on behalf of you I invested. So I'll give a confirmation that is called as P note, and you will hold this P note and you will claim the profits. This is the concept of FDI, FII. In FII we have FPI and QFI.